Hello, it is the 13th of May, 2011. If you've been wondering why there's been no updates on the blog, unfortunately, it's been unavailable close to 24 hours. As soon as it becomes active again, or sometime afterwards, I'll put an update on the blog. In this video, I want to go over the leveraged ETFs, the AGQ, which represents the extra long fund, and the ZSL, the extra leveraged short ETF. Currently, as I'm recording this video, it is 10:53 in the morning. You may want to put this on full screen. And right now, silver's up about 3.6% as of this current video. And on a technical level, we're finding support at previous intraday resistance, but it's really not about that. It's about the leveraged ETFs. So on a double of 3.6, you would think about 7.25 would be the gain of the leveraged funds. AGQ currently is up 6.54, fairly close and really not too unusual. ZSL, it would be down 10, which is obviously more than double. I find that really interesting. And when we move this on to a spreadsheet, I have the intraday or daily levels for all three of them. This represents the ZSL short, the AGQ long, followed by the SLV, the regular underlying ETF. Now, yesterday, May the 12th, what happened was the ultra short gained 10 cents, or that of close to 0.5%. The AGQ was down about 17, or down a little under 10%, where the SLV underline was down about $1, close to around 3%. And this column here represents the SLV shares. Its percentage move for the day yesterday was negative 3.11. The double log down 9.3 rather than that of around negative 6. And the double short or the ultra short was up 0.5% rather than that of around 6%. Interesting what has played out here. Let me just make it a little bit bigger just for your screen. Okay, so now the difference here is 3 times. This is what this column represents. It is this number divided by that number. Plain and simple, how much more of a volatile move it was from the underline. Normally, it's around 2. Now, on the right-hand side, I got all of these numbers here. What I'm looking for are these bold numbers not to be 1. So if I see a 2 in here, that means on the right-hand side, they were both down days for the day. And if I see a 2 here, then they were both up days for the day. So on this day in here, a day in which the market lost a penny or so, both ETFs lost. And that's really not that uncommon. There's a few of them in here. There's one again here where the market lost negative 0.07. Both markets lost again. Another 2 in here. There's yet to have been a day since I've got the data where they both went up on the same day. The market was down 0.2, and then yet they were both down again. I find that very interesting, and there's a bunch of them, about 5 or 6, and they're all about the same. Now this little part of the spreadsheet shows the SLV, AGQ, ZSL. There's no dates here. However, what it has is the top days since May of 2009, and the best day was silver up 7.25%. AGQ that particular day was up 14.9, and the ZSL negative 16.36%. And the difference from this number divided by this was 2.05. You can see that for the most part, it's in or around that 2 level. I also want to point out while I'm at it, if you have a day where a market goes up 10%, that's the equivalency of going from 100 to 110. Therefore, the reverse polarity of a 10% up day would be from going from 110 to 100. And in that situation there, that would be losing 10 on 110. And if we get a percentage for that, it's going to work out to 9.09%. Therefore, a 10% up day is the same as a 9.09% up day. But when we see here that the negatives are usually a little higher or very close, it kind of makes you wonder. Now, in a day here, this is a little more accurate. Still, negative 10.9% is a bigger move than 11.6 up. But that's not really what I want to get at. It's this number in here. You can see that on the upsides that they are pretty much all in that of a 2-time variable. Now if we go to the worst days. The worst days SLV's ever had since the date of the tracking is 11.9%. Once again, we're seeing all of these 2s in here. Pretty normal. And of course, yesterday we had that 3-day right in here. So yesterday was a unique day because it was the first time in SLV history, well, since May of 2009, that the market gained or lost about 1.75%, and one of them had a big difference like this. So I find that extremely interesting, to say the least. Finally, what I want to do is I want to go over one more quick little point. The column D represents the amount of the AGQ. There's no dates on here, but once again, it's all about percentage moves and what the amount would have been if, of course, they would have taken the underlying percentage and doubled it. Meaning, take the 4609, multiply it by 3.4% and add its previous number, it's 4766. Therefore, had SLV always traded exactly double its percentage loss or gain, it would currently be a 203.41 rather than that of 165.5. The blue line represents what it would have been, but the orange is what it actually is. Same thing here for the ZSL, which is 2180 as of yesterday's close. If it would have traded exactly double the percentage, then it would have been 32.29, and the chart for that would be right in here. And even then, if it did work on the double leverage, that means on a 5% day, it's 10% up, 10% down. These things would still be meant to be losers over the long run. For the most part, these things are meant for day trades as well as for intermediate swing trades. Now, the one advantage this has over extra leverage is that of margin calls. You can let the thing just tank and still hold on your position and still kind of hope for some, not profits, but some funds. Where in a regular leverage call, if the market goes down big enough, you are either going to have to sell or put up more money. That's not the case within it. But the disadvantage is if you were to have bought AGQ up here close to around $49 an ounce, then it's going to have to get up to about 53 or 54 maybe, just to get back to the level you were at before. That's the way these things naturally move on. Okay, so that's it for this video. Thank you for watching and have yourself a great day. Bye-bye.